The last time Bitcoin holders were this deep in the red, it was late 2022. We all know how that ended. Today we're breaking down the signals that tell you whether this is the bottom or just a bounce. Let's go. What's up, everybody? Welcome back to Vishmaster Crypto Daily. I'm your host. It is July 4th, 2026, and today we have a loaded show. Tim Draper in denial mode, XRP flashing a never-before-seen on-chain signal, the rally everyone was scared to buy, and the cold hard math on what Bitcoin actually needs to go parabolic. Stay with me. Let's start with the market read because this is what every trader needs to hear first. Bitcoin's profit and loss ratio just hit a 43-month low. Think about what that means. You'd have to go back to late 2022 to find holders this underwater. And we all know what happened next. The Bitwise CIO Matt Hogan isn't dancing around it. He came out and said the bottom is, quote, closer than ever. Swan Bitcoin's analyst went even further, basically telling their audience stop waiting for the perfect entry because you're going to pay more later. Here's what I want you to actually pay attention to, though. This is happening at the same time as extreme fear readings across sentiment gauges. Fear and maximum pain usually rhyme with accumulation zones, not distribution. The ETF market confirmed that thesis on July 2nd when spot BTC ETFs pulled in $221 million in a single day. That is not retail. That is institutional money stepping in while you're watching the number go down and feeling sick about it. The setup right now is fear is extreme, holders are underwater, smart money is buying the dip, and the analysts with track records are calling the bottom close. This is when the trades get made. Watch whether ETF inflows sustain through next week. That's your confirmation or your exit signal right there. Now onto the story that got blockchain detectives fired up. Tim Draper, the legendary venture capitalist who called Bitcoin at $250,000 back when everyone thought he had lost his mind, is denying that he moved his Bitcoin. Here's what happened. On-chain analysts flagged a wallet they believe belongs to Draper that transferred 1,000 Bitcoin to Coinbase Prime. Coinbase Prime is an institutional custody and trading desk, so when you see a whale move coins there, the default read is sell. Draper pushed back hard, said it wasn't him, and in the same breath doubled down on his $250K price target. Look, I'm not going to tell you whether it was him or not. Nobody can say for certain how wallets get attributed. But here's the trader's take. Even if it wasn't Draper, somebody moved 1,000 Bitcoin to an exchange-side platform in the middle of a drawdown. That's worth watching. And if it was him and he's selling, he also denied it and restated his bull case in the same response. Interpret that however you want. While everyone was watching that on-chain drama unfold, our Vishmaster fleet was quietly running delta-neutral arbitrage on the BTC volatility spike, booking about 2.3% during yesterday's swing. That's the kind of trade that pays you regardless of which direction the headline breaks. Let's talk XRP because this one has genuinely interesting data underneath the price move. XRP jumped 8%, and the reason traders are paying attention is not just the candle, it's what the MVRV metrics are saying. MVRV is market value to realized value. It measures how far the average holder is above or below their cost basis. Right now, XRP's 30-day and 365-day MVRV are sitting at -45% and -47% respectively. Sandymit says those are lows XRP has never hit before in its entire history. Never. Contrarian traders love this kind of data because extreme underwater readings often precede mean reversion. When everyone who's going to panic sell has already sold, the downward pressure exhausts itself, and you get the bounce. That 8% move could be the start of that reversion, or it could be a dead cat. What I'd watch is whether volume on that move sustained into the close. Thin volume on a bounce means wait for the retest. Strong volume with conviction means the setup has legs. Now, let's zoom out to the structural question that the CoinDesk team put some real numbers on. How much fresh capital does Bitcoin actually need to go truly parabolic again? The answer is sobering. This cycle has seen roughly $697 billion in new money flow in, generating a 689% gain. Now compare that to earlier cycles where a fraction of that capital drove returns of 2,000%, 10,000%, even more than 50,000% in the very early days. The diminishing returns are real, and they're mathematical. Bitcoin is a much larger asset base now, and it needs a proportionally larger capital base to move. The rough number being floated is around $1 trillion in fresh inflows to get the kind of parabolic run people are daydreaming about. That is trillion with a T. Where does it come from? Sovereign wealth funds, pension allocations, retail FOMO wave number 3, corporate treasuries following the MicroStrategy playbook. It is not impossible, but this is the math. It helps you calibrate your expectations. We're probably never seeing a 50,000% cycle again. But 500% from a real bottom on $1 trillion inflow? That is still generational money sitting on the table. Quick regulatory update that matters for the long game. The major county sheriffs of America, which had previously opposed the Clarity Act crypto legislation, has officially dropped their opposition. They're still asking for amendments to get local law enforcement more resources to investigate illicit finance. A fair ask, but the opposition is gone. The Clarity Act creates clearer jurisdictional boundaries between the SEC and CFTC for crypto assets. Getting law enforcement groups off the opposing side removes a meaningful political blocker. This doesn't move prices today, but it shapes the environment where prices get made over the next 12 to 18 months. Last one, and it's worth watching. SOL rallied alongside a surge in memecoin activity and prediction market volume on the Solana network. I know some people dismiss memecoin season as pure froth, but network activity, even Deegan activity, drives fee revenue, validated economics, and keeps the ecosystem flywheel turning. Rising on-chain activity on Solana tends to be a leading indicator for SOL price, not a lagging one. Whether bulls are actually back depends entirely on whether this activity sustains or was a one-day spike. Your metric to watch is 7-day active addresses on Solana. Trending up means this rally has conviction. Fading fast means wait for confirmation. Alright, that is your July 4th edition of Vishmaster Crypto Daily. Bottom is closer than ever. The data says accumulate, and the smart money is already in position. Do your own research, manage your risk, and if you want to see how the fleet is actually trading these setups in real time, head over to vishmaster.live. Hit subscribe if you haven't already. We are here every single day. See you tomorrow.